Imagine you're leading an infrastructure firm in Lagos or an agri-tech venture in Cairo. Your business model is sound, the opportunity is clear, but investors hesitate.
Too uncertain, too early, too much risk.
Then a state-backed investment fund steps in, not just with capital, but with strategic support, land contributions, risk guarantees, and co-investment partners. Suddenly your project is viable. Multilateral institutions take notice. Private capital follows, and what was once a stalled opportunity becomes a nationally significant development. This isn't a one-off, it's a pattern. Across more than 15 African countries, sovereign investment funds are deploying over $160 billion to catalyze growth in key sectors. From renewable energy and healthcare to industrial infrastructure and digital transformation, they are not merely custodians of national capital. They are strategic actors, reshaping markets, mobilizing private investment, and driving economic transformation from within. But to understand how these funds evolved into such pivotal instruments, we need to go back to when Africa's sovereign wealth vehicles were reimagined, not just as stores of value, but as engines of national development. For decades, Africa's role in global capital markets was largely reactive. External aid, extractive trade terms, and foreign-led investment shaped much of the continent's economic trajectory. Sovereign wealth funds, common across oil-rich and export-heavy nations elsewhere, were mostly absent from the African landscape. Where they did exist, they were modest in size, narrowly structured, and lacked a cohesive development mandate. Strategic capital accumulation remained a luxury for others.
But starting in the 2010s, a shift began to take root, quietly but decisively.
As commodity revenues rose and fiscal management improved, a number of African nations began launching sovereign funds, tailored not to mirror global peers, but to solve domestic challenges. These weren't just wealth preservation vehicles, they were sovereign investment funds, SIFs, domestically anchored, development-oriented, and designed to de-risk key sectors while catalyzing long-term transformation. The objective was clear: use state-backed capital not as an end, but as a lever to unlock private investment, enhance productivity, and accelerate national priorities. It was a deliberate departure from the passive models of the past, and it marked the start of a new institutional era. The results have been both ambitious and targeted. Ethiopia's Ethiopian Investment Holdings, EIH, established with $45 billion in assets, now controls over 40 state-owned enterprises, driving industrial consolidation and institutional reform from within. Libya's NSIA, with $39.5 billion under management, is actively restructuring its portfolio. Its 2025-2027 strategy, aligned with the SDGs, reflects a growing commitment to transparent and socially aligned investment principles. In Egypt, the Sovereign Fund of Egypt, TSFE, is leveraging underutilized public land as equity, co-investing in renewable energy, healthcare, fintech, and logistics, with over $12 billion in assets under management. And Nigeria's NSIA has become a continental leader in blended finance. By working with DFIs and deploying risk guarantees, it has drawn significant private capital into infrastructure, agriculture, and SMEs. As these funds gained traction, international confidence followed. Since 2018, Gulf-based sovereign funds from the UAE and Saudi Arabia have committed over $8 billion to African projects, primarily in infrastructure, energy, and financial services. This is not simply foreign investment, it's strategic alignment. External capital is increasingly recognizing African sovereign funds as credible partners, institutionally robust, policy-aligned, and commercially agile. Joint ventures, co-investment platforms, and fund-of-fund models are on the rise, signaling growing trust in African SIFs as both gatekeepers and co-creators of opportunity. More than 15 African countries now operate sovereign investment funds, collectively managing upwards of $160 billion. But beyond size, it's the mandate that sets them apart. These funds are explicitly positioned as market-shaping instruments, mitigating risk, closing infrastructure gaps, and amplifying national competitiveness. The shift is structural. Capital is being used not to merely park reserves, but to unlock scale in undercapitalized sectors. align state assets with development strategy, and create investable environments for global players. Crucially, governance frameworks are improving. Independent boards, performance metrics, and increased transparency are strengthening their institutional credibility, turning these vehicles into genuine agents of change. Today, Africa's sovereign investment funds are not only more visible, they're more vital. They've become a core part of many nations' economic toolkits, acting as both stabilizers and growth accelerators. Their ability to mobilize patient capital, co-create markets, and align with national development plans places them at the forefront of Africa's next economic chapter. From driving industrialization in Ethiopia to financing renewables in Nigeria, these funds are no longer on the sidelines. They're setting the agenda. Africa's sovereign investment funds started as cautious experiments. Today, they are strategic institutions, deploying capital with clarity, purpose, and increasing sophistication. Their evolution is far from over, but if current trajectories hold, anchored in strong governance, local alignment, and global partnerships, they could become the financial engines of a self-directed, resilient, and competitive African future. This is more than capital at work. It's sovereignty in motion. Follow @Spotlight in Africa for expert-driven insights on Africa's economic transformation.